Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Thursday, March 20th, 5:12 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Revere Roundup and Daily Market Insight video. Market state, we're in a moderate correction, about 8% off of the highs on the S&P 500. Check the trend gauge over here. Market leaders, we've got a 2121 list, and they look pretty constructive, but not making much progress, being held back by the overall weak market. So we've got the red arrow there with the yellow sub arrow. And then we track the major indexes across three time frames using the short-term 21-day moving average. They're all below that level. The medium-term 50-day moving average, they're all below that level. And the long-term 200-day moving average. Most below that level, Dow right on it. RSP, we'll take a look at that chart in a minute, ran into the 200 today, having a hard time getting above it. How did we do today? What happened today? Choppy action after the Fed yesterday disappointed both the bulls and the bears. So basically, we had a rally during the session yesterday after 2 o'clock. The S&P 500 was trading at 5638 at 2 o'clock, right when the statement came out, followed by the opening remarks by Powell, then by the press conference. And the market rallied during his press conference, gave a little bit back into the close. It was not a strong close yesterday, but after hours, the market was rallying and rallying overnight till about 4 a.m. Eastern time. And then there was some chatter about lowering growth over in Europe, and the futures sold off. They were red at the open, but that overnight low and the open were the low of the day, and we rallied off that level, but gave back some of it in the afternoon. So the morning was strong. Then we dripped lower for about 4 hours, minor rally up late in the day, but plenty of choppy action to disappoint both the bulls and the bears. So the jury remains deadlocked as of right now for the reaction to the Fed. I've read positive and negative analyses of the situation, but ultimately we'll let the market decide. Tomorrow we've got quad witching, that is expiration, and it kicks up volatility. So something we'll be keeping an eye out. And we've added a few positions, still lightly invested, over 50% cash, and some index positions. And we'll go through the portfolio as we go through the video. So here are the numbers on the day, the 21 over 21 list. Not a good day, but not a devastating day either. 4 up, 17 down. Remember, we had two back-to-back strong days, then a give back day into the Fed, a Fed up day, and then a pullback today, yesterday. This will become apparent when we look at the charts, but no major damage done. I think one broke the 21-day moving average. The Big Eight, this is the Magnificent Seven plus Netflix, down 0.17%. The RG8, this is our eight growth ETF composite that helps us keep our finger on the pulse of what's going on across the broad growth spectrum, down 0.64%. S&P gap down 7/10 at the open. As I said, the low was put in pretty quickly, rallied, although pulling back after the rally, to be down 0.2%, equal weight, slightly worse. We'll take a look at the rest of these indexes when we go to the charts. Global 60/40, that's 60% ACWI, or sorry, ACWI, or All Country World Index is what that stands for. And 40% All Bond Index, that's BNDW. That was down 0.26%. Our flagship GROTECTION portfolio down 0.2%. Let's get into the charts, and we'll start with the S&P 500. And basically, drawing a couple lines here, we're in a 4-day consolidation after a 2-day bounce off the low, an ugly day, a decent up day with a weak close, and then today, which was an inside day, meaning that the high was below the Fed day high, the low was above the Fed day low. So we'll be keeping an eye on this 4-day consolidation, seeing which way it will resolve, and also a pretty important uptrend line here, drawing a line below the lows from starting with the low from last week. And arguably, we're in a longer consolidation. If you break this out a little bit, you can add 1, 2, 3, 4, 5 more days onto that. But we're staying in the top half of that, and we really want to hold the lows of this current consolidation to see if really what we're doing is treading water. We want to buy time for potentially leading stocks to set up in more sound bases, more than we're seeing right now, to lead a market higher, but loaded with uncertainty. And basically, Trump and Scott Bessent have indicated, because of the trillions of dollars that they need to refinance in treasuries over the next 3 months, a lot of money. They need interest rates to be lower, or the interest payments are going to go up. So that's not good, obviously. So they're really not in the let's goose the market higher type of frame of mind right now. They're really kind of warning about short-term pain, looking toward the longer term gain. But remember, the market does look out 6 months. So if we start to see some positive green shoots, maybe we'll go higher. If things continue to get worse, we'll go lower. It's that simple. We're prepared for either outcome at Revere. Here's the NASDAQ 100, which has been the weakest index, making higher lows, but again, in basically the same 4-day consolidation below the 200-day moving average. Closed below the 8 EMA. Let me go back to the S&P 500. I indicated when I did a video on Monday that step one of 7 steps to going from a bottom to a bull was to get above and stay above the 8-day moving average. We broke below it the next day, got above it yesterday, closed slightly above it today on the S&P 500, but the NASDAQ 100 broke back below the 8-day moving average. Let's look at the equal weight S&P 500. You can see this ran into the declining 21 and the still slightly rising 200-day moving average today before giving a little bit back. But note the relative strength on this compared to the market cap weighted S&P 500, which is being dragged down by those big tech names, which 6 of the 7 are under the 200-day moving average. So that's our equal weight S&P. Let's move on to the other large cap index, the Dow Jones Industrial Average. It's got above the 200-day moving average today, but pulled back right below that 42,000 level. Next up is mid caps. Above the 8-day moving average, an inside day, nice bounce off the lows. We need to see a little bit more. As there was some relative weakness today. And the Russell 2000 really looks exactly like that inside day. Above the 8, bigger bounce off the lows than the large caps. We want to get above the 21 on all of these indexes would be the next move, and that would be another step in the right direction, and really step 2 toward going from a bottom to a bull. So those are the major indexes. Let's go to the VIX. VIX continues to pull back. That's good, below 20 now. We want to see contracting volatility. Because of some really wide ranges, the overall average true range of the S&P 500 is above 1.8, which is significantly higher than we would like it to see. U.S. dollar, some strength today, but ended up that is the UUP is showing that it was up 0.28. The US dollar, they close at different times in the futures, and that's why this shows it just barely down a little bit, but I don't think that's correct. The dollar was slightly higher today. Let's go to precious metals, GLD. Tight consolidation after that gap up 2 days ago. Silver gave some of its recent gains back, closing below the 8-day moving average, down 0.8%. Gold stocks, tight consolidation up near their high since their breakout from that very nice cup and handle base. Bitcoin rallied yesterday, gave some of it back today, down 1.56%. Still, the declining 21-day moving average is capping any rally for Bitcoin. On the bonds, not a lot of bond movement by the close today, but bond yields gapped up. Sorry, bond prices gapped up, which meant yields gapped lower, but they worked their way lower all day, giving up the price gap. There's BND, TLT, same thing, gap up and then give it up. That means rates just the opposite, gap down on rates, but rates climbed as the day went along. So market's still really unable, both on stocks and bonds, to really make bulls or bears stand in the middle of the ring with their hand held up by the referee. Uh, Kind of a draw right now, treading water, which is what we're kind of doing in our portfolio, waiting for some clarity. So that's our inter-asset correlation charts. Let's go to the tail of the tape. Uh, the From a technical analysis perspective, the stochastics are really in the bull's favor, turning up from oversold on the major indexes. The RG8, the NASI has hooked higher. Dollars getting weaker. Um, Interest rates tending to drop. Percent versus the 5 day neutral at a 58. So, the Bulls have that going for it. But again, these are all secondary indicators, and they're really a reflection of what happens in price and looking back in time affects these readings. But they do give an overall direction or a bias. VIX 19.8, fear and greed, no change. Sentiment came out, update today, as it always does. Bulls ticked up a little bit for AAII, but still very low. And bears just down one at 58. It's been 4 weeks now that AAII bears are above 57. Politics is definitely weighing into this as the portion of the country. I mean, we're just in a cold civil war, basically. And you know how that goes. NAAIM, this is portfolio managers dropped 4 percentage points for percent allocated into the market, 64.6 there. A little bit of news, Feb home sales rose more than expected, didn't really impact the overall indexes, but builders were strong on the day. Keys coming into today, we're focusing on that 200-day moving average for the S&P, equal weight S&P, NASDAQ 100, all still below that level. And looking for further progress to the upside in leadership. Didn't really get that today with 4 up and 17 down. Day count, 4 day consolidation. Second day above the 8 EMA on the S&P 500, 19 days below the 21-day moving average. As far as sectors go, oils, utilities, and healthcare to the upside, to the downside, China, banks, semiconductors, software, and biotech. Portfolio, just one starter buy on Palantir. That took our adjusted beta up to 0.6 and our balance at risk at a 1.63. Bottom line on the day, post-Fed choppy action disappoints both bulls and bears. Same 4 keys going into tomorrow. As were today, these are, significant changes to any of these will be a significant change to our outlook and our allocation to the market. Let's take a look at the portfolio. We'll go through, first of all, everything that we own in GROTECTION. Start off with silver. Already looked at that. Minor pullback. Gold, 3 days tight. TGTX. This was our first buy on strength. That was last week. And it's continued to make higher highs and higher lows. But when you're in a channel like this, anytime, and this is another situation when you're in a market that leans bearish, is the top of the range is where you would be thinking about taking profits and buying the bottom of the range. This type of a market buying strength generally leaves you disappointed. If you bought at any of these instances when it was touching the top of the range, you were quickly disappointed as it pulled back. But we're looking for the type of low risk bottom range buys or in a tight consolidation near moving averages. So that's TGTX, really good looking chart and great relative strength. This is just being held back by the overall market. Rubric, we bought this yesterday in a tight flag here. Um, after its earnings gap higher, just consolidating nicely. Palantir, this is what we added today. This has shown subtle relative strength over the last 2 weeks. And the relative strength line got above the 21-day moving average of the relative strength line today. We took a small starter into this when after it got above the 21, pulled back to the 21 and held. We're up like 0.5% in this. Netflix, our largest position, we took this yesterday on the strength in the market when we recaptured the 21, but we've got a pretty clear shelf that we need to get through for some more strength there. But note on these buys, we've got an uptrending, higher lows on all of them, and low risk entries as it's near moving average, and a break of the trend line means we would be stopped. Let's go quickly through the rest of the 2121. OKTA, high on our list to buy, pulled back today and bounced at the 8. Spotify, another one of those names showing relative strength, higher lows, higher highs, being capped at this 600 level right now. DoorDash, same situation, showing relative strength over the last 2 weeks, and actually one of the few that poked out and made a higher high today. Nutanix, again, you're seeing the same theme. Did make a higher high today, but it's in this channel, and we don't want to buy the top of the channel. We want to buy closer to the pullback area. K-Web, China across the board pulled back today, so it's holding the 21, decent risk reward there. SE, one of the I think the only one that broke the 21 day moving average, but it's consolidating very tightly, but not showing the relative strength that we're looking for over the last 2 weeks. Baba pulled back right above the 21. GDX, we showed that consolidation. Lemonade, tight, showing no relative strength, but no relative weakness either. This just looks like a basketball underwater that wants to resolve to the upside. WGS, near the top of the range, above the 21 day. Yum China, as I said, all of China pulled back. This one just to the pivot and the 8-day moving average. Euro stocks pulled back today as well. BJ is not showing any relative strength as a follow up to its earnings move higher, but volume is declining, which is what you want to see on the pullback. But 3 days down now, it's time for some buyers to show up here as it approaches the 21. Deer bounced at the 50-day moving average today and closed right on the 21. MP Materials up after hours as I think the administration is announced funding for some rare earth metal processing. This one's on the thin side, but it's a great chart. Note how it did break out and it's holding at the highs of that breakout, putting in a nice flag here with great relative strength all year. AR, relative strength new high. Oil stocks have been acting well lately. Bros, this isn't in the 2121, but we added to the list some things that we're really closely looking at. And same situation here with the relative strength in Bros, higher lows being made, and it's right around that 21-day moving average. BE also added some strength today. This got an upgrade by Morgan Stanley, but as is usual, when you poke your head above, it's like whack-a-mole. You get hit back down. So buying on strength again, not really the perfect play. And Uber breaking a bit of a downtrend line, higher lows, relative strength, clearing the 21-day moving average today. So those are for Netflix was not in the original 21 over 21 for the week. That and then Bros, BE, and Uber are very high on our watch list as well. So um, leaders to keep an eye on if the market decides to go from this leaning bearish that we're into at a minimum leaning bullish and getting back above the 21-day moving average. That's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. Our flagship portfolio is named GROTECTION. It's designed to grow assets during uptrends, moderate when we start going sideways, get the heck out of the way if we start into a downtrend and be especially defensive if you're below this 200-day moving average. This is where all bear markets occur. We're still within that 3% envelope that I've been talking about below the 200-day moving average. That's 2 ATR below. Sometimes the market bounces around there before reclaiming the 200. But if we were to break the 5,500 level, our exposure to the market would be down to basically zero. And that'll do it for Thursday, March 20th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.